Hey everyone, welcome to Dental Nachos CE on TV. We are going to start our CE show in just a minute. If you're watching in live, there will be an opportunity for you to earn CE for watching in, which may, depending on your state, be rated as in-person CE from your couch, from your treadmill, wherever you are watching in on this CE. If you are watching on demand, you can also earn CE. There will be a short quiz that you will fill out at the end. If you have any questions, you can go into the chat and ask the Dental Nachos team. If you're watching on demand and you have any questions about this CE or other CE, just email us at ce@dentalnachos.com. I am thrilled to have my friend, sponsor, expert, saver of taxes. Jay, this is what I think taxes feel like to dentist, Mr. Grumbly. So before we start the show, just tell us, growing up as a child, is this what you wanted to do? Your dreams come true? Helping dentists save on taxes? Tell us a little bit about what you do.
Well, I'm an accountant. When I was growing up, I realized that nobody likes math. So I wanted to do something which nobody else likes so I can make a good living.
I like that.
That got me here.
And in sharing people, we have people streaming in to watch in on this show, which I'm going to turn over to you in a minute. But just tell us a little bit about what we're going to learn over the next 50 to 60 minutes.
Well, over the decades, I have worked with dentists. I have found that they pay too much in tax. So I have found some techniques which are usable easily by the dentists. If they use those, they can legally reduce their tax burden, and that's what I share in my presentations.
I love it. Well, I'm going to turn this over to you. I want everyone watching in. The topics like this tend to get some questions. So Jay, if you see me pop on, it means I want to ask a question there. If not, we will save them towards the end. But I'm going to turn this presentation over to you. Thank you so much for being here.
Thank you very much, Paul. And thank you very much, everybody, for coming in and listening to me. As you know, I speak in a very beautiful manner with my beautiful accent, but I know people love it. That's what I think, at least. Okay, so we will start today and work on seeing how we can lower our tax burden. So let's start with why you are all giving me 50 minutes of your time today. Why are we here? I'm very clear about it, that the real reason you are here is because you want more money. More money for you. That's what you want. That's why you are here. Now, any person in this universe, there is only two ways they can have more money in their life compared to what they have now. If they want to increase the amount of money they have, there are only two ways. There's no third way. One way is they bring in money. That is, for most people, it is basically, there are some certain exceptions. For most people, it is basically they increase their income. Okay. For dental practice, it is they increase their collections. That's one way for the doctor to have more money, to increase the collection. The second way is to lower the expenses of running the practice. Okay, so either of the two things can help a dentist have more money net with themselves. Now, these are the only two ways, and there is no third way possible. So you have to select one of the two or both of them to, if you want more money. I cannot do anything for as far as the collections are concerned. I can't increase those for you. That is your marketing guy's job. However, I can help you with the second category, which is the lowering of the expenses. Okay. Way there I can help you because I deal with the single largest expense which dentists have in their life. Okay. Most of the time when I ask these questions from doctors that what is their single largest expense, most of them say it is their team expenses. they think that they pay the most to their team. Reality is actually not that for most doctors. For most doctors, most successful doctors. Now, in this whole my own presentation today, when I refer to most doctors, I mean a doctor who owns his practice and collects between $900,000 to 1.2 million, somewhere over there. Okay, so that is the kind of our avatar we are talking about today. Okay. So for most those doctors, the tax they pay is the single largest expense. Okay, because you add up the income tax, federal income tax, the state income tax, the payroll tax is federal at state level. If you add it all up, you got that, and that does become the single largest expense. I focus on reducing that legally to lower that burden on the doctor so they can have net more money in their pocket. Now, I emphasize the term legally because it needs to be done according to the law. If you do not do legally according to the law, you can end up in a big house where they pay for your room and board, but they keep you there for a long time. And I have not yet run into a dentist who wants to do that. Okay, that is why it's better to do it all legally, and that is my techniques are all perfectly legal. They are court tested and IRS approved. For having worked with the dentists over many years, decades now, I have learned that dentists are the most generous taxpayers. Okay, they pay not only IRS in tax, not only the state government in tax, on top of that, they leave a tip. Okay, and that tip sometimes is tens of thousands of dollars. And that is where we try to avoid that. That is the amount of money which you pay in taxes, but legally you are not required to pay. You pay it because you're not doing certain things, you're not taking advantage of certain things which are available in the tax code. For the dentist's returns, which I have personally analyzed and looked at over my career, and I've done a lot of that, thousands of that, what I've noticed is that 95% plus, 95+% of dentists overpay in tax. Okay. They could have saved some more money if they had done something differently, 95% of them. Which means, by the way, only 5% pay appropriate amount of tax. Okay? So out of every 20 doctors, 19 are paying too much. Only one is paying what is legally required of them to do that. And that is, as I said, decades of experience of analyzing returns, tax returns from the doctors all over the country. Now, let me quantify this a little bit more. Hey, an average dentist works, in an average career, about 30-year career, right? So let's take that guy. And it's very easy to pay about $30,000 a year more in tax than they have to if their collections are something between $900,000 to say $1.2 million, $30,000 a year, right? And a 30-year career. So if they had not paid those $30,000 extra every year over a 30-year period, instead they had put that money in some low return investment, say returning 5% a year. If they had done that, over a 30-year period, they would have $2 million. Now, wait a minute and think about it for a second. $2 million more that doctor would have had if they had not overpaid in tax somebody who collects between $900,000 to $1.2 million a year and works over a 30-year career. Okay, that is a lot of money. You can just think, imagine that tomorrow is the day you are retiring and you have $2 million extra. What else can you do with that? Or maybe you can bring your retirement earlier. Okay, as you know, ADA has said that now dentists are retiring at much later than other doctors. There's a number thrown around. I don't know how accurate it is that they have to work up. An average dentist has to work up to 69 years now. Okay, so one factor which you can control that, bring that time frame back to you, more time, buy more time for yourself is by paying less in tax. Plus, that is one, retirement is one thing. You can, if you have, so you're saving $30,000 a year, you can put anywhere in the practice, you can spend it for marketing, whatever, improve your office, whatnot, and help you make more money through that. Important part to remember here is what you collect does not have that much impact on your net than what you keep. Okay. Keeping is more important in terms of money than collecting. Okay, so controlling your overhead and paying less in tax, it helps you keep more, and that is the real number. That is important number, more important number than mere collecting. I've seen that some doctors get into this thing that, you know, like how much I'm collecting, and it is not, it's important, but not as important as what you are keeping. When I talk to the dentists, most of them tell me that they think their accountant is doing a pretty good job of helping them pay the minimum in tax. Most doctors believe that, but the statistics which I see do not prove that, because they're overpaying in tax. And the reason, there are various reasons for that. One is that most accountants, the doctor has not hired them to lower the tax burden. They are not tax planners, they're not tax strategists, they are accountants. Although they say, hey, I'm trying your level best, my level best to make you pay the minimum in tax, but this is not their specialty. This is not what they do. This is not what they are trained. This is not what they spend their time working on most of the time. That is one reason that the accountants are not helping the dentists as much as the doctors think they are in lowering the tax burden. They're not being paid for this, and this is not what they're doing. This is not what their specialty, as I said, and this is not what they focus on. The other thing is that many accountants who don't specialize in working with dentists, they don't know a lot of stuff, how these practices are run and what opportunity is there to lower the tax burden. Accountants generally, most of us, are very good historians. Okay. After the doctor has collected the money, after they have spent it, whatever they had to spend it, accountants are very good at recording it in the books. Okay, and accountants are very good at putting the right numbers in the right boxes at the right time and filing those forms with the IRS at the right time. Okay, so they are very good historians. The challenge is that you actually don't need historian to lower the tax burden. You need visionary, somebody who can envision where your practice is going, what your collections will be this year, what your expenses will be, and what can you do today to lower the tax burden during the year, not afterwards. So this is the difference between historians and visionaries. One of the smartest people this earth has ever seen was Einstein. And he said that the hardest thing in the world to understand is the income tax. Okay. So I guess he was right in many aspects. It's not easy to understand, and the tax, you need to spend time and learn it and need to practice it a lot. Plus, you also need how to apply it to different situations, applying the same law to a dental practice, which appear in a dental practice. And everyone actually whom I run into the dentist circles is that for a doctor, everybody who the dentist runs into, they are there to help them lower the tax. Remember the friendly salesperson from your equipment and supplier company. Okay? They always asking you that if you buy more stuff, if you buy more equipment, Section 179 at the end of the year, it is all deductible. They are helping you lower the tax burden. Okay, the real story is something different. You can never make up by buying equipment which you lose in bad planning of your taxes. And similarly, a lot of other insurance salespeople, everybody is trying to help you lower the tax. But can they do it? It's doubtful. Now, while we are talking about all this, everybody has some favorite secret tax strategy to lower the tax burden. And I hear a lot of them when I go all around the country at these dental conferences and talk to doctors. So I think that I should also, right in the beginning, share with you the most secret tax strategy which I have got. It is the most secret tax strategy. Nobody else in the world knows about it except me, yours truly. Okay? You should get ready to write it down. And let's tell me what that secret tax strategy is. What is the most big? So the biggest secret tax strategy is there is no secret. The tax strategies are secret. We live in the age of Google. Anybody can go do a search for tax saving strategies, or they can even limit it to tax saving strategies for dentists, right? And like millions and millions of pages come up. And you can read about all these strategies as much as you want. You can actually stop working, close your practice for a few months and keep reading about those if you want. Okay? But so there is no secret. Strategies are always, there are a lot of things. What is the actually implementing them according to the needs of your practice. Implementation is the key. Applying those strategies, that is what matters, and balancing them, because sometimes if you do one thing, it affects something else. It might affect the one thing it did first negative. Okay, that's why creating a comprehensive tax strategy and working on it and implementing it is the key. Now that we have gone beyond that there is nothing secret, nobody has any secret sauce, special sauce. Everybody knows about all these things, which even what I'm going to tell you even today, all these things, they are open, available. It's just a matter of implementing them right. One thing a dental practice owner needs to understand is that there are two types of dollars in the world. Okay. Generally, the dollars look the same way. Okay. If you look at the dollars I have in my desk here, lying here, they are all dollars, look the same. In fact, in reality, they are different. Okay. These dollars I have lying on my desk, on this this is my money. I have already paid tax on it. Say, for example, if my effective tax rate comes to say 30%, it means for every dollar I have here on my desk, I had to earn $1.30. $1.30 I had to earn, 30 cents I paid in the tax, and the dollar I am left with. So this is post-tax dollars. It means these are after-tax dollars I have paid money, tax on this money. Then there is something called pre-tax dollars. Okay? The pre-tax dollars are the dollars which are lying in your practice account. You have not paid tax on those dollars yet. Okay. So if you look at the slide there, it will explain to you. You start with the pre-tax dollars which are sitting in your account, in your practice account, and you basically you add any income that comes there. Okay, you take out all the adjustment, the expenses, and all that. And then you apply your tax bracket. whatever your tax bracket is. And then you take any minus credit if you got any tax credits. And then the end, what comes out is your after tax dollars. So you can see this whole process going through the pre-tax dollars. They become after tax dollars. There is a margin there. So I hope you have noticed by this, that is why when you want to spend the pre-tax dollars, because you have not paid tax on them yet. And when you spend those, they don't show up in the after-tax dollars, so you don't pay tax on them. So this is a key thing to remember. So legally, whatever you can spend legally from the business, that increases your net worth rather than spending it the post-tax dollars, which are the dollars in your pocket. Okay, for example, if you run into me, your friendly accountant, in a dental conference, and you decide to take me for a couple of drinks, that is perfectly fine. You're much better off paying from the practice credit card rather than your personal credit card. And now you have saved, say, 30% of what you would have paid otherwise. Now, why is that deductible? Why you can do that? Because I'm an accountant and you are talking to me about business. You're talking to me how to lower your business taxes. So it's a deductible expense. Similarly, if you take this example further down the road, there's a lot of stuff on which you spend your post-tax dollars, where you can spend pre-tax dollars if you think about that and use some innovative thinking. Okay, so it is said that the US tax systems, there are about 70,000 plus pages in which the federal tax code is written and the related regulations and the guidance on that. 70,000 plus pages. And we Americans are also used to the idea of everybody being treated equally and equal. So we assume that all those 70,000 plus pages create a tax system which is applied equally to all of us, and that generates the federal tax system. I have something slightly different I want you to think about. US, there is not one tax system. There are actually two tax systems. Tax system is for people who know how the tax system works. So they have one type of tax system, they pay lower taxes. The other type of people who do not know or don't want to know or are unable to know, for them there's a different tax system where they pay more in tax. Okay, and you keep reading in papers and whatnot that rich people don't pay that much tax. Well, there is a reason. There's an informal different system for them because they have got armies of people, accountants, attorneys, and all that, who help them plan and pay less in tax. Now, when I talk about tax planning, some doctors think, well, is it legal, Jay? Will I get in trouble? So William Rehnquist, who was a Chief Justice of the US Supreme Court, he wrote one of his decisions right here, which says there is nothing wrong with a strategy to avoid the payment of taxes. The Internal Revenue Code doesn't prevent that. Okay, so you are perfectly within your rights to plan to pay less in tax and then implement those plans. Perfectly legal. The IRS has said that, the Supreme Court, as I'm showing you this slide here, has said that. So you can plan as much as you can and arrange your affairs in such a way that you pay the minimum tax. It is not tax evasion. Okay? It is tax avoidance, actually. And you are perfectly allowed to do that legally. So let's now get into specifics. There are 4 general areas on which, if a dentist works, they can lower their tax burden significantly. 4 general areas. I'm going to go on all those 4 of those one by one, and I will then explain those and we'll see how you can apply them. The first and very important critical area of tax savings is efficient bookkeeping. Most doctors I meet, they are of the view that bookkeeping is a very basic task. Anybody can do it. You don't need that much of expertise. The result of that is that they don't have the most competent person doing it for them. Sometimes it is a manager who does it, sometimes it's a front desk person who does it, sometimes the doctor's spouse, dabbles with bookkeeping, and so on and so forth. But the reality is that bookkeeping provides the foundation, the basis on which the house of paying less tax is built. Okay? If you don't do that right, it's hard to get the end result which you want. So you need to have a good, efficient bookkeeping system and a person doing it for you, so you don't end up paying too much in tax. Most dental practices in the US now use QuickBooks. QuickBooks is a software which came out in 1992. I'm showing my age. In those days, they used to call it software. Now these are called apps. Yeah. So in 1992, they came out with it. It was a desk. You used to download it on a desktop computer and run it. Now, of course, for many years, it has been online as well. They are actually, I think, slowly phasing out their desktop version. And it is a good system. And not only dentists only, I think 90+% of small businesses use it. It's a very good app to do the bookkeeping. And of course, they advertise it. It's very simple. It's easy to do and all that. It is easier than, say, using whatever else you use to do the bookkeeping. But it doesn't do anything by itself. Right? It still needs that somebody sets up a right type of chart of accounts. Somebody sets up the right procedures where transactions should go and what type of transactions will go into which category, into which account. It needs all that. So it needs someone to do it. It doesn't come out of the box doing it itself the right way. I know all this AI stuff now coming out, and people think AI does everything. It will do. Hopefully, at one time, AI will be so smart that it will be able to do all that itself. But at this point, that is not the case. It needs to be set up right. Somebody needs to do it. And if you do it right, again, doing it right is in your best benefit, because it leads to the end result of tax savings. Not only the having the correct bookkeeping, it helps in taxes, of course, that goes without saying. But the other thing is it generates the right reports, right kind of reports for you, which you can use for practice management. What I have seen in my practice, we serve dentists all over the country in my practice, a lot of them. And what I've seen, the doctors who do well financially generally have their bookkeeping right, which generates the right reports, and they actually work on those reports. They look at them, they know how to read them, and they compare them, and they use them better. That is kind of one of the indicators of a dentist who does well financially, that they have a good bookkeeping system. Okay, so that is the important thing. The first thing one should do if they want to pay less in taxes, to set up their bookkeeping right and do it timely fashion. The other thing is timely fashion. So, and then, if you don't do it timely, of course, then it doesn't work well. Okay, that's the first area of tax planning, this category of tax planning, which helps. Okay, the second, and this might actually be more important area of tax planning for a dentist. Second opinion on the tax return. Now, this always amazes me. Dentists are very used to seeing their patients going to somebody else for a second opinion, or patients coming to them for a second opinion. They present a treatment plan to a patient, and the patient says, "Oh, yeah, doctor, let me think over it. Doctor, let me talk to my spouse or my dog or my cat or anybody else, and then I'll come back and tell you if I want to accept the treatment plan or not." What in fact happens is after that patient leaves your chair, they go to another dentist and say, "Hey, this is my problem. This doctor says this. What do you say?" So second opinion are pretty normal. But interestingly, the most biggest expense they have for the dentist, and the most important thing which can affect their net worth, on that, dentists don't get the second opinion. I run into doctors who have been practicing 20 plus years, and they've been using the same accountant, and nobody else has ever looked at their taxes. They don't do it. The biggest thing, the biggest favor you can do for yourself is get a second opinion on your tax return. Show it to somebody who has not prepared it and who is a professional. There are a lot of dental accountants like me in the country. Some do it for free, even, like I do, but there are others who actually charge for this service. Whatever method you want to use it, get a second opinion. I can assure you, whenever a second set of eyes look at your tax return, they will tell you something which you have missed or you are missing, or you can do differently and pay less in tax. I can tell you this from my experience. I think the highest tax overpayment I found in my career on a dentist tax return was $138,000 in 1 year. $138,000 in 1 year, a doctor overpaid in tax. They showed me the tax return, and I figured out, and I showed it to them. Luckily for them, I was able to go back and amend the previous year's tax return and get that money back to them. By the way, only your tax returns 3 years back. You can't do further back than that. So if you have been losing money for decades, you can't get it back. This is an interesting thing in the tax law. If you owe the money to the government, they can come back anytime and ask you to pay, and you have to pay. But if you overpaid by mistake or mistake of your error of your accountant, you can only go back 3 previous years. So the sooner you do it, the second opinion, the better off you are. The third big area of where you can lower your tax burden is using your home and your family in your practice. For most doctors, the spouse does some work for the practice. It's a good idea to put them on the payroll, pay them for that service. That is a very good tax planning technique. Using children in the practice helps, because for the first $13,000, $14,000 a child makes these days, there is 0% tax on that if you pay them for the work they do in the practice. So you are taking money from your higher tax bracket, say 30%. Some doctors are in 37% tax bracket, which is the highest. So even if your effective rate is 30%, you're taking the money of 30, first $12,000, $13,000 and giving it to the child, and at 0%. It's a very good tax arbitrage. And the tax court has ruled that a child who's 7 years of age, they can work in the parent's business and be paid for it legally. Okay. So using family and spouse are a big, good method to save money on taxes. Some doctors help some family members, And there are techniques for that as well. If you're helping somebody, that you can pay them from the practice, there are methods to do that. So you're paying them again pre-tax dollars rather than giving them post-tax dollars. Most doctors do some kind of work from their home. Okay, that is a very good way to take a deduction and pay less in tax. Okay, using the home. There are different requirements for that. You need to do all the administrative and function and management parts of the business from there, and you need to do it regularly. And you can't use that area for something else. But most doctors already do that, and you're just not taking advantage of the tax savings part of that. Then there is another thing which is very effective. You can use. There is a section 280A of the tax code, 280A. This basically says that you can rent your home up to 14 days in a year and get rent for it, and then you don't have to pay tax on it. Now, I'm not saying doctors should rent their home out, but what you do is you can rent your home to your practice and have the practice meetings and stuff like that. Okay, and saves and pay yourself rent for that, and that you can get some tax-free income coming to you. That is one method which can be used. So these are different techniques which can be used in the home and family category to lower the tax burden. Plus, when you put your family on the payroll, they become eligible for some fringe benefits. So that is additional tax savings because their employees are allowed to have fringe benefits. Okay, so that is a third big area of tax savings. So these are the common things which you can do yourself. Which so far what I have shared with you, the three big areas of tax planning, you can make changes yourself and do that. And there's fourth area, slightly more. You need somebody, an expert. You need a professional to help you set up, but you can get big rewards in that. Okay, and that big financial rewards if you use those methods. Okay? So these are, for example, one thing is the retirement plans. Retirement plans provide a huge method of tax savings. These days, a couple, husband and wife working in a practice, they can put away more than $400,000 a year tax-free for their retirement. And that can be a very effective way for saving for retirement, especially for older doctors who are getting closer to retirement and haven't saved that much for retirement, to do tax-free. Okay, and then that is like on the extreme side, but you can save whatever you have extra money in the retirement plan, but you need some help to set it up depending on how complex you want it to get. There's a very effective tax saving technique. Now, by the way, when you put this a lot of money in the tax saving, what it helps is sometimes it lowers your total income, so you become eligible for other benefits. For example, qualified business income, where 20% of your income you don't pay income tax on that if your income is below a certain limit. Many doctors have income above that, so they don't qualify to get that deduction. But if you lower your income by using these techniques, then you are eligible for the QBI, quick qualified business income. You can use that. Then there are the other thing with of doctors who own their offices. One other thing which you can do is use cost segregation to increase the way you depreciate your building, and that helps a lot. That lowers your tax burden. Okay. Now, if your income is higher, there are a lot of other things which you can do similarly, which experts can help you set up. But for those who need experts, you need to pay them and set it up. Multiple entities. There are many practices where if you instead of running most doctors run their practice in one entity. But if their income is higher, there are ways to set up another entity, introduce another entity in the mix, and that helps you significantly lower the tax burden. I already talked about retirement plans. And before I end, I want to tell you something. This is about 50 minutes to an hour you have spent here today. For many of you, this is an hour you have wasted completely. I tell you from my experience, this is the case. Because what I've seen is people who listen to me and sit and talk in my lectures and my courses and all that. The reason they have wasted that time is they don't do anything with that. Okay. I run to doctors year after they have spoken to me, and they say, "Oh yeah, you said this, but I never got to do it." Well, it's no use. So I want to help you implement it. So I want you to go and start using it so you actually benefit. And I want to make it easy for you. One method is, the first step you can do is get a second opinion on your tax. Get somebody, set it, ask them to do that. If you send it to my office, yes, we will give you a second opinion on your tax return for free if you want. Okay. Or you can go to anybody else and do that. Okay. So that's the first step you can take to start lowering your tax burden and having more money for yourself. I'm getting end of my time, so I just want to real quick share with you this famous quote from Walt Disney. He said, "The way to get started is to quit talking and begin doing." Okay, so do something about it and get a second opinion on your tax return. Thank you very much for spending this time with me. And if you have any questions, you can send those to us, and we will answer those. Thank you very much again.
Awesome, Jay. I'm going to ask you a few questions. This is very valuable. I feel like I'm more rich already, if that's even proper grammar, but we'll give the CE code in just a few minutes. I have a few questions for you that could help our audience and things I've thought of. One thing I'll share is one of the things I regret in life is not paying attention to my numbers sooner as a practice owner. I paid a lot of attention to team coaching. I was doing practice management, leadership coaching earlier in my career, earlier than most dental practice owners, but I wish I paid closer attention to my numbers. Maybe just help us with this. A lot of dentists in our community are buying dental practices from older dentists that have existing relationships, and they don't have any relationships. Have you seen new practice owners struggle to, I don't know what the right word is, transfer records? Give them some tips on how to navigate conversations with older dentists about being open to either A, analyzing numbers, and B, getting second opinion on taxes, because these can be very difficult emotional conversations when the previous owner had a long-term relationship.
Yes. Well, one thing which I've heard this thing a lot. So one thing which I tell the doctors is that if you want to get a second opinion on the tax return, right, you don't need to tell your accountant. There is no law which says you have to do that. You can just simply, one of the people who does that, send them the tax return, and they'll analyze and tell you. Yeah. And if you don't like it, or if you like it, you want to switch, that's a different story. Otherwise, at least you know where you stand. So the person who produced the tax return, he doesn't need to know that you did that. As far as the older doctors are concerned, yeah. No, records, by the way, these days are not as big a deal, because most people have linked their bank accounts to their bookkeeping system and their payroll to bookkeeping system, and you can run the reports from there. You don't need physical records. You can just get the data from there directly. So
it's worth it to have the uncomfortable conversation and make sure that you can do it respectfully, but there's just kind of missed opportunities that I've seen in myself. Now, my next question, Jay, we only have 4 to 5 more minutes, but I know this is a tough one, but someone asked, and I know this is not legal accounting advice. It's a CE course. People need to consult with you in detail, consult with their accountants. But could you give us some insight on the associate world of W-2 versus the 1099? Someone asked, any strategies for W-2 associates? When would it make sense to switch to a 1099? I know this is more polarizing than should this tooth be extracted or saved, right? That's what dentists do. Extract,
Yeah.
save. There's two camps. They're fighting constantly. But the W-2 or 1099, maybe if you just could reinforce some things that people should think about, because I often see some irresponsible advice on my own Facebook group about this from people who are not accountants.
Yes, yes. Well, I must upfront admit that I am on the extraction side, which means I think for the associate, it is beneficial, much more beneficial to be a 1099 than a W-2.
And tell us more about that. From my experiences reading the internet and hearing from accountants, I was thinking that how are they different than our front desk team employees, our hygiene employees that are all W-2 employees? Like if someone's saying, I want to switch to this and want to do it legally, or I want to talk about it, what are some of the things they should be asking either themselves or the practice that they work in?
Yes. So for the IRS understands this. So on the IRS website, irs.gov, there are check sheets which you can use to figure out if you are an employee or an independent contractor. Okay, so the more things you can check off in the category of independent contractor, then you are an independent contractor. The less things you can check off, then you are more likely a W-2 employee. Okay, that is what it is. Now, what has happened over the years that when we used to have only associates working for individual doctors, it was easy to convince them to make the associate a 1099. Now with the DSOs, it is harder. And DSOs have more control over their associates as well. They exert more control. So it is difficult to be a 1099 associate with a DSO than with an individual doctor or a smaller group. But it is still possible.
And if I give you a softball question or alley-oop question, I got my basketball here, Jay. So this is my alley-oop to you. In the world of putting aside good advice, check the IRS, consult with professionals, make sure you're doing the right thing. But when it comes down to how much you're being paid, why are 1099s often a little higher percentage than a W-2? Like 30% for W-2, 33% of production for 1099.
Yeah, because
even if that's as simple as could be for you, I'd like you to say it out loud for our group.
Yeah, I mean, you see, about 7.5 the employer is saving right away in the FICA tax, right? Medicare and Social Security tax they are saving, which they have to pay otherwise if you are an employee, because you are paying all your taxes yourself.
So one thing that we can help our audience understand is if they're being it should not be the same percentage if you're a W-2 or 1099.
Yeah.
Because the impact is different.
Yes.
Is that true?
Yes, that is.
And my other question for you before we finish up our C is, when people have the urge to buy more than one practice and they become a multi-practice owner, does that always mean they make more money with more practices, or have you seen multi-practice owners actually make less money?
No, I've seen it go the other way more than I would like to admit.
Why does that happen to them from your accounting world, do you think?
They're unable to manage the practices. The doctor cannot replicate. Doctor is a human. He can't like replicate himself, put in the other. The other doctor is also a human. So they are not like doing the same things the same way. And so that is one major reason. If you are running your practice very well, if you put an associate in the second practice, it's not necessarily, you will not be. And dentists also, as you know, they are very individualistic. They don't like to copy the owners, all the techniques and do it. They think they know better.
Yeah. And my other question, my follow-up on this is, maybe we can put this on the record because it's recording and this is a record. And I got my shirt, Steps in EBITDA, right?
Yeah.
If there is a dental student here listening, we can help them, and they say, Paul and Jay, I want to own 5 dental practices, and I want them to collect $5 million a year total. And I don't want to do one bit of work. I just want to manage, right? Let's just say for a second they can manage and they can find the associates. Give them some context of, you own 5 practices, they bring in $5 million. What's a good EBITDA? Like, how much percentage should they be making on not doing any dental work, just managing a $5 million group? Range, give me a range.
So the only managing, if you are talking about only managing, not doing the work, not doing anything, I think if they are bringing 10%, that is a very good number, which will be hard to reach.
And that's why
It's
I'll
not easy.
share, when people talk about this, when you buy and someone did this, and that someone's me, we bought a $300,000 practice. We did grow it, but 10% of a $500,000 practice managing is $50,000 a year. And I want to tell people there's a lot of work that goes in to doing that for $50,000. So make sure you make your practice ownership decisions with caution and care. I'll wrap up on this, Jay. Do you find that it's still possible for associates to buy private practices and be successful as owners, or are DSOs coming to take over the world?
No, it's still possible. I have in my practice, I have doctors all over the country who do very well. It is still possible. You just need a different type of personality. You need to be an entrepreneurial personality. If you're entrepreneurial, you will be successful. You will make more money than you can, run circles around DSOs. But if you are not, then maybe being an associate is better for you at a DSO.
And there's a lot of creative career paths. Well, we have fulfilled our CE time. Jay's down for 1 minute. You can stop share. I want to see us big. Everyone wants to see our faces big. So hit the stop share button. This completes our CE. If you are watching in live and you want to get CE, go into the chat now to find out. If you're watching on demand, there will be a survey that you will question, a quiz. We have a quiz team here that you will fill out to get on-demand CE. Jay, this is now after the CE. I want to thank you for supporting us as a sponsor. If someone has listened this far and they say, I want a second opinion on my taxes, I'm not so sure if I'm doing this right, how can they reach out to you?
Well, they can send me an email at j@jmalik.com.
Awesome. Jay@jmalik.com or
Jay@jmalik.com. Send their tax returns in if they want, and we will take on from there. They can call me. I'm on our office number 305-563-6000.
We'll put that to, and now I'm going to share anybody watching in here on Zoom. I see some of my friends, some of them have the same name as family members that I extra special like them. They know who they are watching in. If you want to watch this recording again, text the word tax now to 215-543-6454. Text the word tax to 215-543-6454. You will be in our special text segment to get this recording when it's ready. Well, Jay, I'm going to stop the recording. Thank you so much.